Hello, this is Todd Foster, and this is your market wrap for the week ended January 4th, 2019. So, Happy New Year, everybody. I hope everybody had a great holiday season and a great New Year's, and wishing everybody a healthy, safe, prosperous New Year. So, I'm not feeling too well today. I woke up with a really bad headache, so I'm going to try to keep this short. We'll see. I do talk a lot, so we'll see how we do. But I want to go back here to the weekly chart of the S&P. Facebook people out there that follow me on Facebook know that I've been posting this in a like a time sequence. My first post was up here. This 20% target was there. Then we started showing it coming down. Well, and I think I showed it to you guys when we got in the circle right there. And then we dropped a little bit further. And guess where we touched? See that red line? The 200-week moving average. It's magic, right? So when everybody was panicking on that Christmas Eve, which was crazy, to drop 700 points on Christmas Eve, all it was doing was kind of coming down here and testing the 200-week. And as you can see, we've bounced up now about 8% off that low. 8% is a good year, any year, right? But we have 8% off the low. We put some money to work. We still have one more. We only bought half positions of that emerging markets and the technology for people in these active models. But we did that right here and right here. And now the market is up here. So although we had a whipsaw in here where we bought and then we had to get back out, I think we handled this really well. And our original sells were up here and even higher up here. And we're buying down here, okay? So I'm really happy how the guys did, Brian and John. Brian did a masterful job. And just how crazy this is, I think the low right here, 23.51. We were looking for under 23.50 to add another quarter. I had said we have one more piece that we had to split in half, and we didn't get under it, so we missed that. But if it keeps going up from here, we'll look to possibly buy. Let me go back to what that chart would look like. You see here we have this blue A. If we get this blue B and to come up here and do this bear market rally, that's one of the scenarios that the bottom is in, okay? And you can see it looks pretty clear that the bottom is in. But the other scenario is that this is just wave 4. See the red labels? This was A, this was B, 1, 2, 3, 4, and we're still coming down one more time, okay? See the negative divergence? So we're in a very treacherous environment. Although the market did everything we expected, hit our bullseye perfectly, we bought in there, we're not out of the woods just yet, okay? And you can see from this weekly chart, see all that resistance? You know that we broke down. What do I teach you guys? You break down and then you test. Now there's still a lot of points in here. It's 2,600 and we're at 2528. So there could be another 70 points or like 800 Dow points still coming. But we got to, look at the weekly volumes here. Now we did have we had a day off, so maybe that could be part of it. So anyway, we're not out of the woods just yet. It's looking good. I'm glad we bought where we did. But as you can see here, if this is going to be 1, 2, 3, 4, we may still have to come down and test this 2276, the 250 week, and put in like a double bottom, then start the bear rally. Now, one of the news pieces that came out today, or two of the pieces, and the two reasons why we're up so much today, is because the jobs report was strong. So all the recession fears are kind of going, kind of melted away a little bit today on that. And remember, this still could just be a correction, meaning this was it, ABC, and we'll go into new highs. Remember I spoke about that. We could have a quick 20% bear market, and boom, we're going to new highs again if the real economy could hold it together. Now, that being said, all of our long-term indicators flipped in December to bear market. So bear market begins right here in January on 1/1, okay? So I have the sell line there. Now this could flip this month if we keep going up, but as of now, we're going to start operating on the bear market rules for the rest of the year. That doesn't mean we just do everything now. Remember, you know, those bear market rallies, they go up 50, 62%, and then they go down. You know, kind of went through that. This B right here, this is where we want to do some things, okay? So if we're still on long-term sell signals and we rally into this zone, whether a new low or not, we're probably going to be lightening up and getting very defensive, buying more bonds, maybe buying another managed futures fund, raising a lot of cash. That's what's going to happen up here, unless these charts change back to bull. But as of now, monthly chart of the S&P, it closed under this blue line, the 20-month. That's a sell signal, long term. The next one I have is this one. We're down here. Sell signal went in December. Okay, again, monthly chart. Here we were looking for a crossover, like here. We got the crossover right here, so I'm marking the chart. Okay, this is a weekly chart. Another sell signal. And this is another one we like to use. When the MACD drops below 0, right here, it's way down here, still very oversold. And it drops below the 65 week, my 65 week, we get a sell signal. Now we got some whipsaws here in 15 and 16. Could that happen? Maybe. It happened here in 2011-12. But it also can catch some bigger moves as well, up and down. So we'll have to see how this all develops. Again, what my point is here is, feels good. Everything's kind of playing out exactly how I've been laying it out for you guys. So that's awesome. It's following our script, but we're still in a treacherous environment. And even though today we had a strong jobs number, jobs are usually kind of a lagging thing. The more important news today was the Fed chairman. Remember 2 weeks ago, I said he talked about this quantitative tightening that they're doing. They used to do the quantitative easing, which made the stock market go up all these years, okay? And then he said, I'm going to do QT, but I'm going to put it on autopilot. Not good, okay? That caused, one of the massive declines that we had. Today, at a round table, he was with Bernanke and Yellen. They were all at a round table just chatting and talking. He said he would not hesitate to change that balance sheet roll-off. Remember I told you it was $600 billion a year, $50 billion a month? He said that he would alter that, and that's what I was looking for, and the market responded how it should have today. So though the Fed looks like it's backseat now, I think the government shutdown, I'm not too sure on that if the president's going to veto that, but that looks like that's coming, that's settling down. We have a good jobs number, so all good. But the real problem this week, and it was just yesterday, was Apple. Apple is now down from the highs. At this low is down 40%. Apple has gone down 40%. You remember a couple months ago when I said the average growth stock goes down 50+% a bear market? We just did 40%. Okay? So there's the proof. All right? This is great stuff for you guys to know. You're probably so much smarter than your friends with the stock market after listening to these things all the time. So we've done 40%. Now, if this is the bottom of the market, we're going to have that bear rally. This should retrace about 50%. So it went from 230 down to 140, I think it was. So what's that? 60, 70 points. Add to half of that 30, 75, 80. That gets us back to around here, $1.80, before it goes down another leg down. Okay? There are some targets on Apple if the math, and if we are going into a bear market, and this is truly a bear market for the rest of the year, and of course bounces and that kind of thing, but it winds up being a bear market, there's targets of Apple going as under $100 a share. Okay? So this is why we stay diversified. We don't like to do individual stocks with your portfolios because we're not taking this kind of a risk. So let's see how that develops. But anyway, you can see the huge gap down on massive volume right there. It was down 10%. Now it's getting back only 3.46%. And I bet you if we show you the volume, let's do it. Look at this. So this is, it sells on red. So yesterday's volume on the they warned. That's just why they warned that China was hurting their sales. Okay. I was always worried about Apple. Like, all right, you make phones. Then when everybody has a phone, what are you going to do? And I don't really use their services. I don't use their music. I don't know. So we'll see. Anyway, that's probably reflected in the stock price. My concerns. It goes down 40%. But look at the volume today. It's nowhere near the volume yesterday. So that's not great. And it's in the gap. So we'll have to see. Again, don't be surprised. Next week, see this red label? 1, 2, 3, 4, and we're still going to come down in 5. Okay? Do not be surprised by that. If it happens, great, because it's still following my script of the 20%-ish decline, you know, makes the first part of the bear market. And we got the 250-day, which everybody, you see how important this 200-week was? People bought it, like we did for you, okay? The smart money knows to do that. I see a lot of times where it breaks that 200-day, goes right to the 250, and then it does the real reversal. So let's say if it's going to do that. So don't be surprised if we do see another dip. Hey, and if it keeps going up, God bless it. All right, we're almost fully positioned. I mean, we're fully invested, and given that our long-term sell signals are on, it makes sense to have some cash still, even if we're going to go up here. But let's see how this develops. If this develops this way, the blue, this was A. We're going to pull back maybe next week a little bit for B. We're still going to do A. We're still going to do B. This could be a blue B. And we're still going all the way up here. So there's plenty of opportunity in here for that remaining cash we have to get invested. But we're not ready to do that just yet. We're at a definite resistance point, negative divergences, and we have that Apple thing. Now, on the Apple, was the question that the markets is coming to grips with was, is that an isolated event only for Apple, or is it showing us something broader in the market that we're having a lot of companies are going to start to warn during this earnings season, which starts, like John told me, on the 14th. The banks start coming out. So that's going to be the big deal. Was Apple just the first shot across the bow, and now we're going to see other companies kind of follow suit that things aren't so good? And it's going to be huge. It's going to make all the difference on whether we're heading right up to this, bear market, this B wave, or we're going to go through it because things are so good, or if we're going to still have some indigestion here and have to maybe jostle around and still hit another new low before we get going. Okay. So again, today was good from the standpoint, strong jobs number, awesome. Shows maybe we're not in recession, even though it is a little bit lagging of an indicator. Okay, great that Powell reversed. I told you in one of my updates, I don't know where I wrote it, but I said by the end of the month at the Fed meeting, they were going to drastically change what they said. He did it today. Okay, so I was unaware of this meeting until yesterday, 2 days ago. So we got the Fed out of the way in the short run. Now, if this jobs number keeps coming in hot, he's not going to raise in January. We get to March, right here, and the jobs number is still kind of strong, and he has to start raising rates again. The market didn't like when he started acting bear, hawkish and raising rates. Imagine we were here around March, April, and then we could kind of come back down. So he's still a wild card. He's out of the equation in the short run. He's a wild card still for the rest of the year. And of course, this trade war with China is bad. We see Apple, the direct result of that. So we got to get that. We got to get some news there. And that could change kind of how I think about this. But if we start hearing from Caterpillar, I think Boeing's been tanking. What's Boeing? I don't really watch this stock. Went from $400 to $290. This is a weekly chart. Doesn't look big here. Here, I'll show it in a different way. I'll show it on a daily chart. Here's Boeing. It's having a nice day today. See, already, I'm just going to show you some stuff. Let me open this up. I don't think we're out of the woods yet. Look at the volume. Terrible. And when we break down out of a big, I always tell you guys, I love doing these with you because I flipped. We're right at resistance. We broke down, and now we're testing it on light volume. And look at, there's the 50 and the 200 day. Right here. So how much more is this going to go up? if this is truly a bear market, okay? So if this is truly a bear market, I don't know, Bone probably shouldn't go any further than right in here. Then I was looking at like Google and I think Amazon. Amazon, it looks like a short to me here again. So let's see. I mean, Amazon's got to really break, you know, this downtrend. And we have all this resistance. Now I do like that we had that, see the positive divergence? See that? It's awesome here. And that caused this big bounce. But now what happens? All right. So like I said, I'm happy on how we've been handling things great. We've been great entry points, all this kind of stuff that's going on. But we still have some cash. We get under that 2350 toward, now if we drop, that's going to be the target, is going to be that 2276. Let's say 2250-ish, somewhere around there is going to be our next hit. Somewhere under 2350, under 2300, we're going to make those next two buys if we drop. And again, looking at this, at some of this, I think Google was another one. I was looking at some of these this morning. Maybe that Google's not as bad. It's kind of coming up. Google doesn't look that bad. What about Caterpillar? Yeah, I don't know. Remember I've told you that the biggest rallies happen in bear markets? I mean, you know, Caterpillar's got to get over 130 here. And look at the volume. It's pathetic. Let's go look at the volume of the ETFs. We got about 45 minutes to go, and I'm probably going to let you go. Yeah, look at. We got 45 minutes to go. I hope there's a volume surge at the end of the day because we have lighter volume than yesterday. It's not really great. How about the Qs? Because they're up huge today. Yeah, just still lighter volume. That could be a lot of Apple volume in there, so that's not so bad. So let's see. So again, the jury's still out. You know, I don't think we're out of the woods completely right here, but it has done what we said it's going to do. So, you know, let's cheer them up. If it does continue up, we'll look to maybe put that cash to work or not. We'll have to decide on that because we are operating on the bear market rules. So having a little bit of cash isn't the end of the world. Okay, I think we're 95% invested on your equities, of your equity portion of your portfolio. So we're in good shape. However, I showed you some of these charts and the volume. If we're going to take one more trip down towards that 250 week, that's where we're going to put that money to work for you. Bonds, very bullish, but extremely overbought. This is the ag, and you can see that wasn't our entry. I gotta take that off. Tried to break out, couldn't do it, but man, look at this volume. Look at that. So bonds are very bullish, and even if these have to. Now, if we go down to that 2250-ish area, these bonds, they're going to go up again. They're going to break out of this space, and then this will be support. But you can see why getting out of our bonds, all of our bonds, did not make sense. We're back here at the highs of the bonds, okay? And it looks very bullish. There's a weekly chart of the ag. It's like the S&P of bonds, and look at that volume. So here's the TLT. I show you that one. Look at the move this thing made. This is the TLT. It went from 111 to 123. Ooh! And that makes sense because stock money was coming out of stocks into bonds. Okay? But this looks this maybe not even complete here. You see that 4 again? I have a 4 here on the TLT, and that lines up with the S&P 4 that I was showing you. Maybe this jostles around a little bit in here and still going to go up here to finish off its rally before it has a bigger correction. When the S&P does that B-wave rally, bear market rally, then the bonds come in a little bit. So bonds but they are very overbought, but very bullish, and we'll be adding to those in the next couple of months. Gold and silver look great. Gold has no more resistance. So as long as it holds over 1240, my 65 days, 1230, 1240, we're up at 1300. We touched 1300 yesterday. Oh. Yeah, we kind of got through that. There might be a little bit of resistance in here. And but gold's looking good. It even got over, I didn't put these on here, the 200-day, above it, and above the 250-day. So I like gold. It's looking good. It's down a little today because the market is you know, ripping to the upside. There's the 250-day. It's above that too. So gold's down 76 basis points. Still looks really good. GLD holds above this. We're good. And more importantly, the U.S. dollar, because the Fed's a little more hawkish, you see it's down today. It looks like it wants to, this looks like it's starting to roll over. If we can get the dollar to roll over, gold's going to go on fire. Gold's been going up without the dollar. The dollar's been just kind of, look at it, it's like weakish, but it's still close to the highs, right? And gold's been doing this. What happens if the dollar falls down? Gold's priced in dollars, the dollar falls, the price of gold goes up. So we like this. And I think if we're in a bear market, it's going to be good. And even if we're just having this was a midterm correction, we're going to new highs, the economy's good. If the Fed's going to lay off a little bit and there's some inflation going to build, gold should still work. So I think gold's looking good. Again, as long as we hold that 65-day around 1230, 1240, we'll be looking for higher gold. All right, that's it. Went a little longer than I thought, but I'm going to let you guys go. Let's just go look at the markets real quick. Coming into the last 45 minutes. Yeah, looks. I think we're going to hold here around up 700. I think on the Dow. But let's see. I expect probably next week we're going to get at least a little bit of a pullback. I would think, or we could go up a little higher and then start a little pullback. If it's corrective and nicey, we may add, fill this gap, starts to turn back up again, because then maybe we're getting into that bear market rally. If this rolls over, if this starts to pull back next week and starts to get through here, maybe through this 2440, and starts to accelerate, then be prepared for a new low. Okay, where we'll be putting you all your money, all the cash back to work at that point, and then waiting for the bigger rally. Okay, so that's it, everybody. Have a great week, and we'll speak to you again next Friday. Take care. Bye-bye.